Okay, let's dive right in. Compass just posted a truly historic third quarter, and their CFO gave us the inside scoop on exactly how they pulled it off. We're going to break down all the key numbers and the strategies that made this such a standout period for the company.
Right off the bat, the CFO, Scott Wallers, didn't pull any punches. He flat out called it the strongest third quarter in the company's entire history. Now that is a pretty bold statement, so let's dig into the numbers and see what's backing it up.
So let's put that claim to the test, shall we? We'll start with the big picture to really get a feel for why this quarter was so historic. And here is the headline number you need to see: a whopping $1.85 billion in revenue. Now, to put that into perspective, that's almost a 24% jump from this time last year. In any industry, that's impressive, but in real estate, that kind of growth definitely gets your attention.
And this wasn't just a story about revenue. They were firing on all cylinders, setting new third quarter records pretty much across the board. We're talking market share, profitability, even the amount of cold, hard cash they brought in. It was a totally comprehensive win.
So the big question is, where did all this growth actually come from? Let's take a look under the hood at what was really driving these record-breaking numbers.
Look, it's one thing to grow your business, right? But it's something else entirely to post these huge gains when the rest of the market is, well, kind of flat. And that's where the story for Compass gets really interesting.
I mean, just look at this chart. The difference is night and day. Compass's organic transaction volume, and that's key, that means growth from their core business, not just buying up other companies, it grew by 6.6%. The overall market, just 2%. Compass grew more than 3 times faster.
And what happens when you outperform the market that dramatically? Well, you start taking a bigger piece of the pie. Their market share climbed all the way to 5.63%, which is up 83 basis points from last year. They're definitely gaining ground.
Okay, so we've seen the impressive top-line growth. Now let's talk about what really matters, the bottom line. Because let's be honest, revenue is great, but profit is what keeps the lights on. And wow, the profitability numbers are just as impressive. The company pulled in a record $93.6 million in adjusted EBITDA for Q3. That's a massive, and I mean massive, 80% jump from the year before.
Now, for anyone who's not an accounting whiz, just think of adjusted EBITDA like this. It's a really clean way to see how profitable the core business is. It basically strips out a bunch of the financial noise to show you the fundamental health of the company's operations.
Okay, this is a super important detail that the CFO pointed out. If you just looked at the official books, you'd see a small net loss of about $4.6 million. But, and this is a big but, that was only because of a $7.5 million one-time expense tied to a merger. You take that out of the picture, the company was actually in the black, with a net income of almost $3 million.
So, how'd they do it? The CFO laid out this really clear 3-part game plan. First, they improved their margins, getting a nice boost from the Christie's acquisition. Second, they kept a super tight leash on spending. And third, they got a fantastic performance from their partnerships, like their mortgage joint venture.
All that operational strength also produced an incredible $73.6 million in free cash flow. And what did they do with that cash? They paid off their entire $50 million revolver debt. That is a major sign of financial discipline and health.
So, with a fantastic quarter in the rearview mirror and a much cleaner balance sheet, the CFO then turned to the future, laying out what we can expect for the rest of the year.
For the fourth quarter, it looks like they expect the good times to keep rolling. They're projecting revenue to land somewhere between, let's call it $1.6 and $1.7 billion, with adjusted EBITDA coming in between $35 and $49 million.
And beyond just the Q4 numbers, the CFO really wanted to hammer this point home, that focus on efficiency and cost discipline, it's not a one-time fix. He made it clear that this is now just part of how they operate.
And here's the proof in the pudding. They're lowering their full-year operating expense guidance again. All told, that's a $34 million reduction from what they first projected for the year. That shows they are serious about finding ways to run leaner. So, what's the takeaway? Compass proved it can deliver on both massive growth and smart efficiency. The real question now is, can they keep this incredible momentum going and make this record-breaking performance the new normal? We'll have to wait and see.